What's going on, traders? Just want to give you guys a quick update on my thoughts when it comes to the overall market. It's going to be a short, quick, simple video. I'm just here to give you guys a few scenarios on what could potentially happen for the rest of this trading week. What you do with the information is completely up to you. So our focus here is the SPY daily time frame. And as you guys can see, we have this massive rising wedge pattern here. We got a rejection here, rejection here, rejection here, bounce here, bounce here. And so if we're talking about a bearish scenario, right? Because historically, what happens when Jerome Powell speaks is that you get an initial move and then you get the actual move. And what I mean by that is, for example, heading into tomorrow, let's say we're bearish into his speech and his rate cut speech, right? And if we are looking to be bearish heading into his speech, then I imagine we're going to start filling this gap all the way at 675 before bouncing back towards the upside. Now, we can argue that there's a inverse head and shoulders pattern here. If we do match to fill this gap at 675, where you have a shoulder here, head here, and another shoulder here. And then from there, we can bounce back towards the upside, possibly break this neckline at around 690 and head towards 700, between 700 and 705. That would be the bearish scenario. Now, if we are bullish tomorrow, and let's say we pump all day, right? Let's say we head all the way to 700, we hit the top of this rising wedge, majority of the day tomorrow, and even maybe Thursday. From there, I do imagine the market is potentially going to top out for the rest of December. Now, I showed you guys in the past, and feel free to look it up yourself, but in the past, historically, a lot of the times you do get a pretty decent drop heading into Christmas, and then the Santa rally historically happens after Christmas. Between the end of December and the beginning of January, you do get that Santa rally. So that's what I'm looking at right now. If we're talking about a bearish scenario, I'll be looking at a move towards 675 and then a bounce back towards the upside, and we start heading towards, you know, that 700 target. And if we're talking about a bullish scenario, then I'll be looking at a move towards, you know, straight to the upside. We hit 700, between 700 and 705, then we reject back towards the downside, start heading towards this gap fill at 675, possibly even lower than that. Now, something to support our bullish sentiment, let's say if we're focused on the bullish side of things, is cheddar flow. And I've showed you guys this multiple times, where if we're looking at where the call walls are, we're seeing that there's a massive call wall at the 690 strike. You got 1.3 billion GEX here. And then even at the 700 level or strike level, you have another massive call wall here with a 1.4 billion net GEX. So that's what I would be looking for in regards to upside, is the move towards 700, 705. Again, it's very much possible that we reject tomorrow morning. We are seeing the SPY give up a pretty key level at around 684, 683.6. If the SPY gives up 682.1, then I do imagine that they're heading towards 680 and possibly get towards that gap there at 675. Now, when we look closer at the daily time frame, we talked about this in another video. It was like a 2-minute video where we were acknowledging that there's a hangman pattern here, right? And just because the hangman pattern doesn't play out right away doesn't mean that it's not going to play out. This can simply be delayed. And we see that often in the market, where a lot of patterns, whether they're bullish or bearish, end up being delayed and they don't play out until a few days later. So right now we're back in the range of this hangman pattern. If you look here, you're seeing a lot of resemblance here, right? You got a bearish setup here, you drop, bearish setup here. You can argue that this is a hangman pattern, you drop, and it's looking like we're kind of repeating the same process here, where we could potentially drop, right, like we talked about before, 675, before bouncing back towards the upside and heading all the way towards all-time high 700, between 700 and 705. And then from there, I do believe that we potentially top from there heading into Christmas. It all depends on how fast this move happens. We look at the SPX and you're looking at the same exact scenario, right? Where you have on a daily time frame, you have this massive rising wedge pattern, right? Pretty much the same exact thing, right? And then you zoom in, and if we are looking to fill this gap here at around 6,770, then I do imagine that we're going to bounce back towards the upside and head towards all-time highs at around 7,000, 7,050 range. However, if we just continue towards the upside, just, you know, shoot straight towards the upside, then I do imagine that if we leave this gap behind, at some point in time, we're going to hit the top of this rising wedge and then possibly reject back towards the downside and fill this gap, possibly even go lower than that. Now, another bullish case here is the VIX, and this will be the last thing I go over because I don't want to go too deep into things because I think it's kind of pointless heading into tomorrow, just given how annoying the market has been all week. But if we're looking at the VIX here, you have a gap towards the downside here. So if we're talking about scenarios, we could be bullish heading into tomorrow morning, where we fill this gap all the way at around 15.5, because it's very rare that the VIX leaves gaps open for too long. So I do imagine that we could potentially, reject back towards the downside here, fill this gap, and then boom. Okay, and you're looking, and crazy enough, you're looking at a double bottom if this happens. So if this exact move happens on the VIX, right, you'll have a bottom here, you'll have a bottom here, and that will be your double bottom, and then your neckline will be right about here. It's a little, it could be a little bit off, but around 17.5, 17.2 is what you're looking at as far as the neckline. So I would pay attention to the VIX, and I would correlate this with where the SPY is, whether the SPY is at 700. So if we fill this gap and the SPY is at around 695, 700, I will be kind of hands off when it comes to the market. I would kind of sit back, relax, or you can start trickling in on puts. It's really up to you. You do what you want, but that's kind of my thought process heading into tomorrow or even the rest of this week. And I'm not saying tomorrow we have to hit 700 right away, right? It can happen the rest of this week, and then next week we possibly tank towards the downside, right? Or vice versa, right? So that's what I'm looking at when it comes to the overall market, or at least the SPY. So again, in conclusion, guys, if we fill this gap heading into Jerome Powell speed, so if we on a daily time frame, right, if we start filling this gap to 675 on the daily time frame, heading into Jerome Powell speech, or even during Jerome Powell speech, before even possibly heading towards 700, or my target of 695, then from there I do think we're going to get a bounce. We head towards the upside, we form that inverse head and shoulders pattern, boom, we hit 700, 705 sometime this week, between this week and next week. However, if we just continue to pump, ignore this gap, and we just pump all the way to 700, 705, because maybe we're pricing in the rate cut happening already, then I do imagine that's going to be the top. Boom, you're going back to the downside, and then you're heading towards that 675 target. But let me know what you guys think in the comments below. What do you think is going to happen the remainder of this week or remainder of this month? I would say this month has been pretty boring so far, which has been expected. You look at the 2-hour time frame on the SPY, you've just been consolidating for the past 2 weeks, and it makes sense, right? November, you have 2 of the major holidays of the year when it comes to the United States. So it makes sense that you're consolidating, and you're heading into Christmas, right? People don't really want to buy anything outside of gifts. Everybody's kind of risk off, and you're just consolidating. You've been consolidating since like Thanksgiving of last week, and you're not really going anywhere, right? You see little spikes here, but you give it all back. You see spikes towards the upside, you see spikes towards the downside, but ultimately you end up right back in the same range. So pretty boring week so far, right? And December does have a history of being pretty boring, right? Unless you end up tanking or you're consolidating, but otherwise you don't really see much action towards the upside for the month of December, until at least the end of December, I should say. And then heading into January, you get your Santa rally. But you guys, again, let me know what you guys think in the comments below. Discord link will be in the description below. And until the next video, traders, have a good one.